Because he didn't have a trading plan. He didn't even know what to do. What is trading? Trading is a marathon. Trading is a continuous race. Trading is a war, a market, a battle. This is the war which I have to win. A marathon is a long race, not a sprint. So what do we have to do in a marathon? We have to survive till the end because 90% of the new traders do not make it. Only 10% succeed. Now, do you want to be part of that 10%? Then you are most welcome in IFX Academy. If you want to be part of the 90%. So open YouTube, go there and learn strategies. Watch someone's strategy for 5 minutes and start trading and you will lose your money. Come on. Because you need to understand this. If you fail to plan, you have already planned to fail. If you haven't made a trading plan, if you have failed to make a trading plan, trading system, trading strategy, risk management, analysis, expectation. If you haven't made all of this, so what? You have already decided that I have a plan to fail. You have prepared that I will fail. My account will definitely be zero. You have only decided, made up your mind. Your account will definitely be zero.
What will you do? You will fail. Your account will be wiped out and you will come back to a big zero.
Whether you put in $1,000, $500, $100, $10 or $100,000, it will have gone to zero because you have failed to plan. If there is no planning, then it is bound to go to zero. After 5 months, 1 month, 10 months, it will go to zero. So you have to plan. Trading discipline is key. When you stop following your trading plan, you become rewarded. You need to understand that trading discipline is our foundation, is our key. Now, what is the spice? We get addicted to random rewards. Now, random rewards are an addiction, a psychological behavior problem that gamblers have. And in trading, when we engage in unguided trading, we develop the same problem. Now, what is the problem? When you stop following the trading plan, you become rewarded for lacking discipline. Because you followed your own will, your heart's desire. You did not follow the trading plan. You got rewarded for that. You may start believing that abandoning the trading plan is no big deal. Because will the market go up or down? However, you left the trading band. Of course, there are 30% losing periods for you. During the losing period, you followed your emotions and you got better. You said this method is fine. Following the trading plan is not necessary. But when you left the trading bank, when the rest of the 70% winning period of your strategy came, you were driven by emotions and you lost 70%. Your account got washed out. You didn't understand what happened to me. So you have to follow your trading plan, brother. You cannot leave it. It is important that you justify this, distinguish what are justified wins and what are unjustified wins. What is a justified win? When you followed the plan. What is an unjustified win? You gambled, you guessed, you got lucky. Now, what is the benefit of this? It will be a justified win. Your trading plan will be solid. It will be firm. Your strategy will be strong. You will develop discipline. If you get an unjustified win, you will get the dictionary of random rewards of gambling. You will become a gambler and all gamblers lose money at the end of the day. You will die in trading. Who will benefit? That social media superstar who got you to open an account through their link or who took money from the broker for marketing and taught you a failed strategy. You were misled. He will make money, but you will not make money. So the purpose of this is that you don't follow such black sheep, such wolves who will wash your accounts. So you have to follow trading discipline. Eliminate bad habits. With trading discipline comes profitability, not just profitability, but consistent profitability. We need consistent profitability. We don't just need profit. So how will this happen? We have to self-effect and start planning. How to find a trading style? You need to find a trading style that matches your personality. What is the first step of a trading plan? Self-reflection. Because all trading starts from affecting on yourself. Side trading is 90% psychology, 10% trading plan strategy. Alright, when you start self-reflection, your trading plan and trading journey will begin because you have to execute it. You have to execute the trading yourself. Now there is a gun. Any gun, no matter how well I make it. But the shooter has to be good for the gun to work. No matter how good the quality of the gun is, it will never hit the target unless the shooter is good. Now, no matter how good the trading strategy or trading plan is, inside the executor, the trader is good. If the trader maintains self-control, controls their emotions, controls their fear and greed, keeps their expectations realistic, is not blindly following anyone, is not following any scammer, is not misguiding themselves by looking at a scammer's unrealistic dreams, then what will happen? He will be able to execute it properly. If the shooter, the trader is wrong, incapable, he will lose all his money. I am repeating this because this is what happens in the market. So you have to take care of it. So you have to be self-effect on yourself. Trading strategies, systems, and methods that are not compatible with your profile and personality will drastically lower your chances of success. We have found that strategy, that plan, that trading style which matches with our time availability, our financial situation, our personality. So you should write all these things down. The first thing is, what is your motivation to be a Forex trader? The second thing, why do you want to be a Forex trader? Forex traders who are not serious and committed to the craft will quickly be eliminated in the market. Seeking thrills, seeking consistent profits don't go together. All right, if your motivation itself is wrong and you're trading big result and consistent profit. You have to decide whether you want big results or consistent profit. If you want to become a successful trader, you will choose consistent profit. What do you have to do with this? You have to determine what your goal is. In trading, this can be expressed monetarily using a profit goal. Percentage of returning currency over time. You have to be specific in this. For example, I want to make 1% every week. I want to be winning 50% of the time by the end of the year. I want to double my account in 6 months. These goals need to be written down. Then you need to see how much money you can afford to use, what your risk capital is. Risk capital is the money that, if lost, does not have a harmful financial impact on you. Now, what do we have in trading? We don't have $100 in the account. We trade by borrowing from someone. They say we went back home empty-handed. Brother, trading doesn't work like that. So you have to see how much money you can use. You have to trade on it. Don't risk what you can afford to lose. The money that would ruin your lifestyle or living standard. Don't trade with that. Because you know there will be losing trades in between when you are not ready to lose money. If you are not ready to accept a loss, your profit will be hit. This never happens. Most of the time, it doesn't happen that you make a profit after trading. So, you have to be ready to lose money to make money. So you will invest the money which you can afford to lose, which allows you to follow your trading plan. If you invest money that you cannot afford to lose, then you cannot follow the trading plan. One thing, don't trade Forex with your money until you have accumulated your risk capital. Alright, until you have accumulated risk capital, do not start Forex trading. Until then, what should you do? You should do demo trading.
Risk capital is the capital that you can use.
Nowadays, there is another way you can use the profit account, but that too after being successful in demo trading. Otherwise, you will just be giving your money to the profit directory and happy taking yet. They are also sitting there to loot you. Nobody is there to help you. Platforms are there to make money off you. How do they make money from you? They know 90% are losers. So even if 10% succeed, we will learn from the strategy. 90% who will fail, their money will come directly into our account. Brokers are sitting, or directly 90% of the money is coming into our accounts. Everyone is kept in the B book. Especially in India and Pakistan, most of the brokers are book brokers, and even those who open accounts in Pakistan and India do so with book licenses. Why? Because they know they will lose money. So we have to be very careful. Everyone is against us. Everyone wants to take money from us. We have come into this market. We want to take money from them. So we have to be very careful. You have to decide how much time you can dedicate to Forex trading. The first thing you need to understand is this. This is where a big misconception occurs for people, where people are very misguided. They say, I have a little time, so I will use it for a short time. This is the biggest hole. You will never come back in reading. In trading, the less time you have, the larger the time frame you should trade. The more time you have, the shorter the time frame. You can trade the short time frame. You are trading the most time you need in front of the charts. If you cannot give that much time during the day, then you will use the trading style that demands less time. You also need to dedicate time to develop and tweak your trading system. Now, what did we discuss about the trading system? It is a strategy. What is a 20% part of the trading plan? What do you need to consider in the trading system? You need to consider the trading style. Which trading style will you adopt and what do you need to choose? So the second thing is you have decided which kind of returns you expect from Forex trading. What kind of return do I expect to make and how much risk to take to get these returns? Now, one thing is I want to become a millionaire. How much money are you willing to lose to become a millionaire or billionaire? Okay, you need to decide this before trading. Before entering trading, what kind of return do you expect to make?
All right, what return do I want? But how much am I willing to lose for it? Whenever you decide this, your life will become easier because basically the door will be down.
Drawdown is normally calculated as just the distance from the highest value of your account to the next lowest point. Okay, but it's perfect from minus to minus. So you have to keep your expectations realistic, and the more time you give to trading, the more your account will grow. As much time as you can give. Now adjust your realistic expectations accordingly and adjust your return expectations.